Gold prices continue to struggle. Another session, another down day. As we saw just going back to February 20th, we hit $13.50 in gold. I'll say that again, we hit $13.50. Today we were in the mid 1280s. It has been pretty much a straight move lower. 1280 should be a decent support line. If we break through that, it just kind of becomes, I think, a free fall with buyers stepping in here and there. There's obviously some critical events in the workings in the next 3 to 4 weeks, which I think will keep gold from declining too much further. But right now it has just been a wash. And any speculation that there was going to be a 1400 print or even a 1375 print has gone out the window. And I think ultimately that while gold still has its place over the last week and a half, it certainly has lost its luster as interest rates have crept higher. I think, and as we've seen a risk-on move in equities, although they've been able to really push higher, we still remain positive equities. So I think a lot of those things are right now playing into the gold trade, which has seen a lot of sellers very, very quickly. And if you look at the dollar, yeah, the dollar helped a little bit of the sell-off, but it hasn't been the only reason. And the dollar right now is very mixed, obviously, with the U.S.-China trade deal. There's some optimism there, which is bidding the dollar, the higher interest rates, but the Federal Reserve being on hold is going to be kind of pulling it down. So there are certain right now variables at play right now, and the dollar ultimately will be the currency that survives when you're looking at what's going on over in Europe and between the UK and the European Union. Likewise with China, the dollar will survive, but it will certainly get pulled backwards and forwards, and it's just seen a bit of a run to the upside here, aiding in some of that gold sell, but certainly not the cause of it. And lastly, let's look at those positioning numbers. Well, we're starting to trickle in to get more and more since the government shutdown. And as of February 19th, we saw speculators at their highest level long since April of 2018. Well, you can probably bet your bottom dollar they were the biggest sellers on this $75 decline since the highs were put in. So I think speculators are probably relatively flat. We won't get those numbers until Friday, but certainly that seems to be the case. Gold right now looking at 1280 as its next key support. If we break below there, again, you're going to see opportunistic buyers stepping in. But until we get closer to Brexit, which I think is the catalyst for the next big move in the macro markets, you're likely going to see gold kind of hover here as it made its attempt to push to the upside to make new highs, and it failed.